Today, we are talking about one of my favorite zero down loan options for home buyers, the USDA Rural Development Loan. And don't worry, you don't have to live on 20 acres in the middle of nowhere. So let's get right into it. The first thing I want to address is, what is the USDA loan? This loan type overall is a lot less popular and well known than some of the big ones like FHA, conventional, and VA financing. So the USDA Rural Development Loan offers qualifying individuals and families the opportunity to purchase a single family home with no money down in eligible rural areas. So this is 100% financing, meaning that you would not need to have a down payment in order to close on a house using this loan type. If you want to relate it to something, it's almost like a down payment assistance, but instead of a grant or some type of forgivable second loan, this is all in one loan program, similar to almost a VA loan. Now, this is cool because it's not just restricted to first-time home buyers. So repeat home buyers can use this as well. With the USDA loan, there are two routes to getting this different type of financing. And I want to break down the differences for you because they can be substantial. And based off of your personal finances, you may find that one route is better for you than the other. So the first one I want to talk about is the USDA direct loan. This caters specifically to our low and very low income applicants and helps them through subsidies. You would work directly, I underline direct because this is the direct loan, directly with USDA, the agency. So you do not go through a lender, you would go through USDA if you fall into the very low and low income category. This loan type would be a 33-year payback for low income earners up to a 38-year payback period for the very low income earners. So it is longer than a typical 30-year mortgage. The reason being is because they do extend it a little bit longer to try and bring the payments down. With the direct type of USDA loan, USDA sets a standard that is their interest rate. Right now, their fixed interest rate for this loan type is 4.25%. or lower if modified by payment assistance. So if they are looking at your file, you fall into that very low income category, and they see that you're not going to be able to afford the monthly payment at the 4.25 interest rate, they may be able to help you with some type of payment assistance, which would include bringing that interest rate down, therefore lowering your monthly payment. Now, this direct loan is usually closed in about 45 to 60 days. So it is a little bit longer than what you could expect with some other loan types once you find the property and you actually go under contract. Let's flip things over to the other way that you can get the USDA loan, which is the guaranteed route. So this helps lenders make 100% financed, no money down mortgage loans to moderate income applicants. So you would not be going through USDA for this loan. It would still be called the USDA Rural Development Loan, but the guaranteed route is something that you can get from a lender in your area. There are lenders in every single state that you can personally work with to go the guaranteed route, and that way you're not working with USDA directly. Now, with the guaranteed route, it is a normal 30-year fixed rate loan with interest rates set by the individual lender that you work with. So typically they would follow market rates. So right now we would anticipate that a guaranteed loan probably would be in the mid to high fives, as opposed to the 4.25 that you would see with the direct loan. With the guaranteed loan as well, these close a little bit faster. As long as the turn times are good with USDA approving the files that lenders turn in, typically you can expect to close in around a 30-day period. Now, these two different routes also have some different qualifications. So for the direct loan, your income would need to be at or below the low income limit for the area that you are trying to buy a house in. So this direct loan is specifically, once again, for those low and very low income earners. There is no set credit score minimum, but I will tell you from having clients go through the direct loan process that they are going to take into consideration how likely it is that you are going to be able to repay debts. So do you have a good history on paying utility bills? Do you have a good history on paying any credit cards? They are going to look at that in addition to your credit score if you have one. In order to qualify for this direct loan, you also have to be able to prove that you are without decent, safe, and sanitary housing. And you must be unable to obtain a loan from other resources. So this could be that your credit score isn't good enough to qualify for other loans. Maybe you don't have enough down payment saved. Maybe your debt to income ratio is a little skewed and prohibits you from qualifying for other loan types. So you do have to meet some specific criteria to go the direct loan route. There are going to be more hoops you also have to jump through in order to go the direct route, but that is because that specific route to the USDA loan is specifically for those low income individuals. Now, with the guarantee loan, things are a little bit different. Your income cannot exceed 115% of the median household income for the area. So this is honestly pretty good. In most places, like in Arkansas, the 115% of the median household income is like, I want to say it's like a $93,000. So you can make a decent amount of money and still qualify for this zero down loan option, which is pretty cool. I will say to keep in mind that whether you go the direct route or the guaranteed route, something that's different about USDA is that they will take into consideration the income of anyone living in the household. So they don't have to be someone who is going to be on the loan with you, but they take household income very seriously. So if you have a parent that lives with you and has a job, if you have a teenager who lives with you and has a job, they are going to want to see like W-2s for all household income. So just make sure that if you are applying, that you take that into consideration, that the total that everyone brings in the household, regardless of whether they are going to be on the loan or not, would have to be under that 115% of the median household income. For the guaranteed loan, there is no 100% set credit score minimum. But keep in mind, this is the loan type that you would get through a local lender in your area. So most of those lenders are going to require about a 640 or higher when it comes to credit score. And that is really because they can set their own requirements for what score they require in-house. So most of the times I see that they want to see a 640 or better. Obviously, the higher the score, the better borrowing terms you are going to get. In order to qualify for this guaranteed loan, you also have to prove that you are unable to qualify for conventional financing with no PMI. Conventional financing with no PMI or private mortgage insurance means that you would have 20% or more to put down on a house. So if they see that you have cash reserves in your savings account of what would be 20% of a down payment or higher, you are not going to be able to qualify for this guaranteed loan. This is just for people who kind of have less money in savings and need assistance with a 100% financing program. I will say for both the direct and the guaranteed loan type, you do need to be either a U.S. citizen, a U.S. non-citizen national, or qualified alien, and then you must not be barred from participation in federal programs because these are federal-backed loans. Like I mentioned in the beginning of this video, there are some property requirements. So you can't just buy any house in any location. But even though this is a rural development loan, you don't have to be buying a house in the middle of nowhere either. So let's talk about the property requirements. The property must be located in a rural area, and USDA defines this as either a property that is outside of the city limits, or usually most cities that have a population of 30,000 or less will also qualify. So you could totally be within the city limits as long as it is a smaller city, which is pretty cool. The house also must be a single family dwelling. You cannot buy something like a duplex, for example. Attached, detached, condominiums, modular, and manufactured homes are all allowed. So you may be thinking, well, Nicole, if it must be a single family dwelling, how can I buy a condo? Well, a condo is sold to you as just one unit, right? You're not buying the whole building. So that would be considered single family because you're just buying one unit. A big deal with this loan type is that you cannot include income producing land or buildings. So you cannot plan to have a business on the property. You cannot plan on farming on the property. If you're interested in a USDA loan because you want to get into farming, they have other programs for that. This is specifically just for single family housing. So this would not be the loan type for you if you're trying to buy or build something on a farm and then use that farm to make money. The property that you are going to purchase must also meet HUD 4000.1 standards. These are set standards for health and safety of the house. So most things have to be in good working order. The property overall has to be move-in ready condition. Things that won't fly are like peeling paint, or if your HVAC is not working, maybe your kitchen doesn't have appliances. All of these things must be intact and the home has to be pretty move-in ready in order for it to meet the HUD standards. Now, there's also no maximum purchase price with the USDA loan. So the USDA loan is going to take into consideration your income and use the limitations of your income to give you your maximum purchase price. But there's no dead set requirement that says all USDA homes have to be under X dollar amount. In addition to this, there are no set acreage limits to what you can buy with this loan type. But however, if you are buying a house that sits on acreage, do be aware that the lot size or acreage has to be considered common for the area. So it can't be a super outlier. You can't be the only house that has 20 acres in the city. They will probably flag that and not let it fly. So there are some additional applicant qualifications that you would have to meet for this loan. When it comes to income, as long as you are not self-employed, you would need to show a 2-year work history. Now, this does not have to be all at one job. If you have gaps in your employment or you have switched jobs, that is totally okay. They just want to see that you have been gainfully employed over the past 2 years. Now, college can also be used as part of this 2-year history, which is pretty cool. If you got a degree and then immediately went into working in a field that matches your degree, that time that you spent in college can also be used for a portion of that 2-year period. In fact, that's what I did when I bought my first house. Now, things are a little bit different if you are self-employed. You would also need to prove a 2-year work history. But with self-employment, they are going to want to see like your business tax returns for those 2 years. So it is a little bit more difficult if you are not super on top of your bookkeeping or you haven't been in business that long. With this, you also have to make sure that your monthly housing payment does not exceed 29% of your gross monthly income. So that's a good thing to start thinking about before you even apply for this loan type is what would 29% of my monthly income be? And do I feel like I'm going to be able to get a home in my area for a monthly payment of that amount or less? An additional qualifier is that your monthly debt payments, including your mortgage payment, cannot exceed 41% of your gross monthly income. So that would be like your DTI. They're looking at a maximum of 41%, including your potential mortgage payment. I just wanted to throw some helpful hints here at the end. Keep in mind that even with a 0 down 100% financing loan like the USDA Rural Development Loan, you will still have closing costs. Closing costs will probably be 3 to 4% of your purchase price. So these are something that you need to plan for. Now, if you do not have the savings, there are some workarounds. You can get seller concessions where maybe when you are negotiating your offer, you ask the seller to pay for a portion or all of your closing costs. That is allowed. And as the market becomes a little bit more balanced, more sellers are willing to do that. Another option is you can get gift money for the closing costs. So if you have a family member, let's say, who wants to gift you the money and pay your closing costs for you, that is also a possibility. And then depending on your appraised value of the house, if the appraisal allows it, you may be able to roll your closing costs into your loan as well, which would basically be financing them in rather than paying them at closing. Obviously, if you have the reserves to pay them, you've got a little bit of savings, you can just do that, wipe them out, and not worry about it anymore. Another thing to consider is that with a zero down loan, it is going to take you longer to build up equity. So if you are using the USDA Rural Development Loan, just make sure that you're going to live in that house, I would personally say, for about 5 years before you think about selling. The longer the better, because you are starting with zero equity in the house. And as you make payments, of course, slowly, some of those payments will go to principal, but most of it's going to interest pretty quickly as soon as you start paying on it. So it does take a few good years to start getting to a point to where you have enough equity to where if you wanted to sell, you're not losing money. I know we sped through a lot of information today on the USDA Rural Development Loan. It is truly one of my favorite options to walk my clients through if they are looking for a no down payment option. Let me know what other questions you have about this loan type and how I can explain this process further. Don't forget, I have also made a video talking about the USDA construction loan. So if you are interested in building a home using this zero down program, definitely make sure to check that out. I'm Nicole, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.